Hi, good to be with you, Tyler. Yes, that is correct. October is often seen and is characterized as a bad month. But if you look at it historically, it's actually kind of an average month. Over the last 20 years, as far as the calendar is concerned, it's been about the seventh best month in the calendar. Looking back since World War II, it fits somewhere roughly in the same area. So it's not something that investors should fear, although October is oftentimes the most volatile month of the year. We see the biggest intraday swings in stocks, kind of like we're seeing today in the month of October. And oftentimes the first half of the month is sloppy and it gives way to the second half of the month where we see a pretty good setup for what is oftentimes a seasonally strong period in the fourth quarter. So October gets a bad rap. We think you should, just stay the course with your portfolio and understand that it might be volatile here for a little while.
As one of our money managers said during delivering alpha last week, stuff seems to happen in October, and indeed it does.
Yep.
And so that's probably why it gets the rap it does. You like some of the big tech names. You do not own Facebook anymore. Why did you get out of it? Were you prescient pat yourself on the back if you'd like. Were you prescient in foreseeing what might come Facebook's way?
It's a great question. And we got out of it a while back prior to the pandemic. And it's an example of being right on the company, but wrong on the stock. So the stock has done well, despite our correct call that, the culture at Facebook was, for lack of a better term, toxic, that the decision-making quality at the company was questionable, and that the business practices had us concerned about the long-term growth of Facebook in terms of regulation and also just folks wanting to use the platform. And we certainly have seen a decline in usership on the Facebook platform over the last couple of years. Nevertheless, the stock has done well. So I think we got the business right, but the stock has done okay despite that. We continue to think longer term, though, Facebook runs into some pretty strong headwinds as far as these challenges are concerned.
And what about the rest of big tech, Jason?
Yeah, we like a lot of the FANG names still. We've been owners for many years of Apple and, Amazon and Microsoft, Google, et cetera. These are strong secular growth companies with wide economic moats that continue to dominate their respective categories. And the good news is that if you look at the valuations of these companies whose fundamentals continue to compound upon themselves, these stocks don't look all that expensive. I mean, Apple is a sub 30 PE. Microsoft is around 32 times forward earnings. We also like Adobe, which is actually at its lowest relative valuation to its history. Nevertheless, revenue growth continues to be well north of 20%. So we think you can stick with these large cap technology names, especially in an environment where we think growth at the macro level will normalize, thus making secular growth more attractive by comparison.
And one of the stocks you like is a name that hasn't gotten much play in recent years. In fact, it's been sort of the opposite of a market darling, and that is Oracle. Why?
That's right. Yeah, we recently picked up some Oracle during the Evergrande volatility a couple of weeks ago. It's been on our watch list for some time. We think Safra Catz and Larry Ellison are doing a great job of pivoting that company toward the cloud. It reminds us a lot of Microsoft maybe 5 to 6 years ago after Satya Nadella took over, in that it's an underappreciated enterprise cloud play. And it's got a good relative valuation if you look at it vis-a-vis some of the other cloud areas in mega cap growth technology. It's trading at around 17 times forward earnings, despite the fact that they have a really large installed base of enterprise customers regarding their database management systems and their CRMs for years. And we think they can transition and have shown that they will transition a number of these clients over to the cloud. They were the 6th largest cloud player a couple of years ago. They're now firmly number 3. We like what they're doing there at Oracle. Stock's not expensive.
Shepard Smith here. Thanks for watching CNBC on YouTube.